Good day, Junior Tickies. We are going to look at Fixed Assets Activity 5. The financial year end is 31 May 2021. Always remember, make sure you understand when does your accounting period end and when does it start. If my accounting period ends 31 May 2021, it means it starts the 1st of June 2020. Looking at what is required, these are the questions that we are going to answer, but you're going to see later on throughout the video, I'm going to focus on other aspects as well. So looking now at the fixed asset note, they provided us with land and buildings, computers, equipment and vehicles. So we are going to look at each one individually. We start with number 1, with the land and buildings. Grant construction was paid $882,000 for building new offices, $610,000 and repairing windows, $272,000. If I look at the fixed asset note, we need to look at land and buildings. We've got the balance, the cost in the beginning, and there's no balances given to you at the end. This is straightforward. To solve the additions, number 1, you simply need to identify which of those amounts do I need to use. Do not add them together. When repairs is done, we will need to show it in our repairs account as an expense to the business, to the company. When there's additions, building new offices, that will go to additions at cost. So the $610,000 will be number 1. So the answer for number 1 in land and buildings, $610,000. Computers. The 3 computers were all bought on the same day at $36,000 each. Depreciation is calculated at 33 1/3% on cost. These computers are expected to last another 2 years. Please take note of the following. There's a reason why they provided you with the information by saying it will only last you for another 2 years. If I go look at the information given, it was all bought on the same day, $36,000 each. If I times that by the number of computers we've got, it equals the $108,000. If I take the cost minus the accumulated depreciation, you would notice that the book value or the carrying value is a small amount. Please remember the same as in the previous activity. I said to you, always be alert when the book value is that low. When they tell you the computers is expected to last another 2 years, that should give an indication, an alert should go off immediately. If you take $108,000 and you times it by the depreciation rate, it equals $36,000. So number 1, $36,000, the depreciation is now going to be more than the carrying value, and that is a problem. If you take $36,000 and you add it to the cost, it is also going to be more. So when this happens, what do I need to do? And like I said in the previous activity, it all depends on the number of assets that I've got. The carrying value can never be a negative or a 0. The carrying value should be 1. But if I've got more than one asset that has reached their lifespan, it means we always need to times it by the number of assets that we've got. And this is why they told you there are 3 computers and they were all bought on the same day. So to calculate the depreciation, we are going to take the carrying value in the beginning minus the carrying value at the end. So the carrying value in the beginning is 13,000. We are going to subtract 3 because we've got 3 computers. So my total depreciation is 12,997. So your answer for number 2 for computers for total depreciation is 12,997. Remember, when we're completing the fixed asset note, it should always be in brackets. Equipment. Additional equipment was purchased on the 1st of February 2021. So they've told you that additional equipment was purchased. If you go down to the movement, you would also notice there is additions. They didn't tell you the price upstairs, up in the information. They told you down here in the tangible asset note, additions was 172,500 and disposals was 0. So when we're calculating depreciation on the new, it's always from the day we purchase it until the end of the accounting period. So we've purchased it on the 1st of February 2021, which means that we need to calculate depreciation for 4 months. So on the new, we're going to take the cost, 172,500 times 10%, and very important, times 4 divided by 12. This is the part where the majority of the times you get it wrong because you've calculated the months incorrectly. Now we need to calculate the remaining or the old. So we need to look at what did we have since the beginning of the accounting period. So we are going to go to the beginning. The cost was 1,250,000 and we're going to times that by 10%. So my total depreciation for the year is 130,750. When completing the tangible asset note, it must always be shown in brackets. No brackets means you will lose the marks. And this is when I'm talking about the tangible asset note. In this question, they just said to you, calculate number 1, 2, 3, 4, and 5. Then it doesn't matter in the format in which they illustrated or asked you to. Looking at vehicles, depreciation is 20% per annum on the carrying value. Carrying value means we need to get the book value. To get the book value, we always take the cost minus the accumulated depreciation. A vehicle was sold for cash at carrying value on 31 December 2020. The fixed asset register reflected the following. So it provided us with the cost of that asset and the accumulated depreciation on the 1st of June 2020. So when calculating depreciation on the asset which we disposed of, it's always from the beginning of the accounting period until the day that we have sold it. So we've sold it on the 31st of December 2020. This means depreciation must be calculated for 7 months. So cost minus accumulate equals the book value times 20% and very important times 7 divided by 12. So the total depreciation is 5,600. If I open up the asset disposal account, again, this is just to revise it. Step number 1, we always take out the cost. So the cost was 176,000. Step number 2, we've done already. We've updated our depreciation. Step number 3, take out the total accumulated depreciation, where to the asset disposal account. So it will be the balance in the beginning, 128,000 plus the updated depreciation. Step number 4, record the selling price. Step number 5, calculate if we made a profit or a loss on the sale of the asset. If you look at this activity, the vehicle was sold for cash at carrying value. So this means that the selling price would be bank. That is going to be my details, and it will be the carrying value 42,400. To get the carrying value, we take the debit minus the credit side. And this is the same amount that will reflect on your tangible asset note. Disposal at carrying value. Always remember, on the fixed asset, tangible asset note, disposals must always be shown in brackets. So this is why I've got brackets 42,400. We now need to calculate the accumulated depreciation at the end. We need to calculate number 5. So please remember, disposals is always what I said earlier, at carrying value in my tangible asset note. So this is why you should always write in brackets the cost minus the accumulated depreciation. Where did we get these totals from? From the asset disposal account, when we took the cost minus the accumulate. To calculate the balance at the end, we're going to take the balance in the beginning, 800,000, plus the total depreciation, 256,000, minus the accumulated depreciation on the asset which I disposed of. That equals the balance at the end, 922,400. We have now completed question 5.1 to calculate the missing figures from number 1 up to number 5. This is not part of the question, but I think it's important to understand because this is the most difficult, or what learners find the most difficult, is as soon as we have to calculate using the diminishing balance method on the remaining and there's asset disposal involved, how do we get what was the remaining? So there's different options. The first option is we always take the book value in the beginning minus the book value on the asset which we've sold, but very important, the balance in the beginning times the percentage. So what is the book value in the beginning? It's 1,300,000 minus 48,000, and we times it by 20%. The book value on the asset which we disposed of was calculated earlier. There's the cost minus the accumulate. It's just to make sure that you understand where the 48,000 comes from. We could also look at, but what is the cost in the beginning minus the accumulate in the beginning, and then we just need to subtract the asset which we disposed of. So the cost in the beginning is 2.1 million minus the cost of the asset which we disposed of minus the accumulated depreciation, the balance in the beginning, minus the accumulate on the asset which I disposed of in the beginning. That equals exactly the same answer. There's another way that I could work this out. If we just look at the accumulate, we could also look at the accumulate and we say 800,000 in the beginning plus the updated depreciation minus the 133,600. And that equals, if I take the cost minus the accumulate, it will give you exactly the same answer, 250,400. Please make sure that you understand this. How do we get the remaining, the old, when we're using diminishing balance method and there's asset disposal involved? Why do we need to subtract the asset which we've disposed of? Because we've already calculated the depreciation on that. And we didn't have it for 12 months. Depreciation is calculated on the asset which we sold from the beginning until the day that we have sold it. Question number 2. Explain how the internal auditor should check that movable fixed assets were not stolen. So how can we check to see that there's nothing missing? Always do a physical inspection. The same as what we do with our trading stock. When we do a physical stock count, we compare it with the trading stock account when we're using a perpetual or continuous inventory system, so that we can see if there's any deficits or if there's a trading stock surplus. The same we can do with our fixed assets. We need to do a physical inspection and randomly and on a regular basis. Have an asset register. An asset register is an individual record of all my assets, and it contains all the details, the date of purchase, the depreciation rate, what is the depreciation, anything that involves that specific asset is indicated in that asset register. Question number 3. Land and buildings were bought 5 years ago for 6 million rand. Property prices have increased by 20% since then. The directors want to increase the value of this asset and reflect a profit of 1.2 million in the financial statements. As an independent auditor, what advice would you provide 1 point? So in the previous activity, I've mentioned about the historical cost when it came to our land and buildings. So here they've asked you the question, why can't we show it at 20% plus if the price then increased? Because of GAAP principle, we need to use the historical cost. What was the original cost? The financial statements should not be overstated to create a false impression on profitability, because that's what's going to happen. Just because our asset is worth a lot more now doesn't necessarily mean that I'm going to get that when I sell my asset. It all depends on what the markets are doing. There could be tax implications. So for that reason, we always show it at the historical cost. We have now looked at all the questions that was required. I want to now focus a little bit on how we could integrate this question in cash flow statement. This is typically a type of question which we can incorporate in cash flow statement with the investing activity, where we need to find out what was our proceeds from the selling of an asset. Remember, at school level, cash flow statement will always be at carrying value. There will be no profit or loss on the sale of the asset. So when we're looking at this, the proceeds from the sale of the asset would be that 42,400. If I need to find out what was the purchase of non-current assets, our non-current assets consist out of land and buildings, computers, equipment and vehicles. This means we're going to add everything under additions. The 610,000 plus the 172,500 will be my total purchase of non-current assets. Now I'm going to take this a step further. Purchase of non-current assets will be an inflow or an outflow. This is what we need to identify in cash flow statement. Because we've purchased, this will be an outflow of cash. The proceeds on a sale of the asset, that will be an inflow of money. Again, this is just to plant the seeds, and every single time I'm going to put some water on top of it. So by the time we get to cash flow statement, you will have a better understanding how the fixed assets is incorporated into it, and how we can use everything that you're learning here now to solve the cash flow statement investing activity. Thank you very much. I hope you enjoyed this video. In our next video, we're going to look again at similar type of activities that we've been doing now. The only difference is now I'm going to look at where we've traded in a vehicle or an asset. And then we're going to look at our last activity on problem solving, so that you can see that how problem solving questions is incorporated with fixed assets. I want to leave you with this quote: study while others are sleeping, work while others are loafing, prepare while others are playing, and dream while others are wishing. Have a wonderful day. Bye.